Retirement for Life. Your passport to a comfortable and confident retirement. The podcast that's equal parts education and entertainment, where we break down the retirement maze with a dash of fun and a heap of wisdom from your host, Christian Sear CPA, the passionate retirement specialist and president of Sear Financial Wealth Advisors, the independent registered investment advisor specializing in the AIM Retirement System.
All right, welcome to the Retirement for Life podcast. Hi, guys. How's it going?
Good.
Today, I'm so excited about this episode. I have all these notes. Look at these notes. And we're gonna be talking about something that is just top of mind for me and our retirees today. Before I do you guys know about the American College of Financial Services? American College of Financial Services put on the Retirement Planning Conference of the Year in Orlando this month. And guess who was there? Take a look at those two pictures. I met two of my absolute heroes. Ed Slott, the America's IRA expert.
Yep.
I was giddy, like a schoolboy. And that guy on the right, Dr. Wade Pfau, his first research from 2014 changed the way we invest here for the better. Changed the way we think about retirement planning. But what I learned at this conference, guess what else I did at the conference? I took my selfie stick. I brought my lights. I interviewed 25 financial advisors who are supposedly retirement planners. I have over an hour and a half of footage just of me interviewing financial advisors. You know what's funny? I was so worried. How are people going to want to talk to me? Do you know what financial advisors love to do?
Talk.
Yeah. It was like I didn't have to beg anybody. But I have to say I came away extremely proud after that conference, and I'll tell you why. The very first workshop we had was attended by the entire group of financial advisors. There was probably 400 and some financial advisors in workshop number 1. And it was how you can bring tax planning, advanced tax planning, into your retirement process. And I want to tell you, it was the most well-attended event. And all I can tell you is that I should have been on the panel. I should have been on the stage as an expert panelist, because here's what some of the things they said. To bring tax planning into your firm is not easy. It takes work. You have to have knowledge. You have to have understanding of the tax laws. You have to really, it takes you to another level. But guess what? The number one thing that 7-figure retirees want, they want
Tax planning.
Yeah. And the whole conference was great. And when you interview 25 financial advisors, you can tell some of them, there's some videos I took of guys that are on point, like we are. But there's a lot of guys who just don't know what the heck they're doing. And this is supposedly the cream of the crop. This is the retirement planning conference, right? These are people who want to be holistic. These are people who, anyway. So yesterday was a microcosm for what we're going to be talking about today. The ceasefire in Iran is basically all but dead. It's on life support, okay? And I think, did anyone hear how Trump explained what's going to happen to Iran if
something about making them glow, was it?
Like you could see him, you'll be able to see him glow from a satellite or something.
Yeah.
There's been a lot.
Right? That came up, and it seems like more and more. He's in China today. He's headed to China. But I bet you the first thing on his agenda when he comes back from China is to make Iran glow. All right, that came out. 3.8% inflation. We'll talk about that. The highest it's been in 3 years.
Yeah.
Right? I went to the gas pump last night. I paid $4, and this is rural America, right? It's not a metropolitan city. Rural America, how much it was in your town? How much do you think I paid for gas last night in your town?
I don't know. I use diesel.
When I
Sorry.
drove by, my eyes got wide.
$6.
I was
for
shocked.
diesel.
It's diesel.
The cheap stuff last night was $4.96.
Yeah,
What a
today
great
was
time. I
almost-
just bought an e-bike.
Yeah, I was speechless. When I drove by that, I was like, there is no way.
Gas
Mhm.
is, I think it's the highest it's ever been in America.
I
It's
don't know.
$5.
I remember when I was young, it got really high for a short period, and then it went right back down. But
Okay. So all of this is happening in one day.
Mm-hmm.
And the stock market went down 0.16% yesterday.
Mm-hmm.
The stock market is on a holy tear. The last 3.5 years, it has doubled.
Yep.
The last 18 years, if we include this year, 2026, has been up 16 of the last 18 years. You're talking like you're getting to unprecedented territory here.
Mm-hmm.
And 2018 was down 4%. So basically, you've had one bad year in the last 18 years. All right, so Andrea, we're going to be talking about a lot of things today. We're going to be talking about inflation. We're going to be talking about jobs, interest rates, and how technology is changing everything right in front of us. But let's start with the stock market. Are your clients that you've been dealing with now for 15 years, are they getting a little complacent about the stock market? How many calls do you have people saying, oh, I'm worried about your investments?
No, no one's concerned about the market exactly. It's more world events, I guess they're paying more attention to, but I wouldn't say that they're necessarily concerned about their returns right now.
It's interesting. Do people complain to you about,
How?
are they getting too complacent?
I think so.
Yeah?
This is usually how it goes when you're in this type of period. They're pretty quiet.
Yeah, our clients are, they're experiencing major wealth effects. They're in that group of people that probably, maybe they flinch when they see that gas is $5, but they're not going to change their habits really in any way. They're seeing their portfolios hit all-time highs, and so that probably is a part of why they're not, too worried about what's going on with the war and what's happening with the stock market, because their portfolios are at all-time highs.
Yeah.
It's starting to feel like euphoria stage, just like a little bit of chaos. Yeah. It didn't feel right, but now it's very odd.
By the way, back to the gas thing. I have a gas-friendly hybrid.
Mm-hmm.
$75 to fill up the tank.
Yeah.
I wish.
Yeah. How much does it cost to fill up your pickup?
Like 200, just under 200.
That is crazy.
Yeah, and we bought e-bikes recently, this was before the whole Iran deal went. So yesterday I rode my e-bike to the office.
Jenna's going to make you ride your e-bike on the next vacation.
Yeah. Oh, yeah, for sure.
So yesterday we're talking to a prospect, like a $8 million prospect. And he's a former financial advisor who's coming to us because he's saying, look, even though I was a financial advisor for my entire career, I never really thought about taxes and whatnot. And he asked you a question, Emma. He said, because Emma has the initial CFA, she's the investment expert.
Mm-hmm.
Do you remember he asked you, Emma, when's the stock market going to stop going up? And what do you say to that?
Yeah, I literally said if I knew that, I would be a millionaire. There's just, it's hard to say. It's impossible to predict, but it's funny when some clients will ask, well, you're the expert. You should know like when it's going to drop. And that's kind of what the market's all about. Nobody knows. We can all bet, but nobody knows.
It's funny. You hear a lot of traders say like, oh, this is a good area or that's a bad area. But for a long-term retirement plan, to say, okay, when you retire in 2030 to know what's going on, you don't know what's going on then. You have to plan.
Right. So this is all good news, and we're going to get to some bad news and what really is happening underneath, okay, the surface. But before we do, I always like to say I was right.
Mm-hmm.
So a month ago, we were sitting here. The scariness factor was up a little bit, right? And this chart, you remember, basically we said that, hey, the experts are saying not to be concerned, and it was right. And so I just want to say, you watch this podcast, you're going to get good information because we told you so, right? But I want to start talking, Ian, a little bit about some of the bad things now. So we had a new Fed chairman announced. How do you pronounce his last name?
Warsh, right?
Like, I'm going to wash the dishes?
I think so.
Okay.
Yeah, just yesterday the Senate confirmed Kevin Warsh as the new Fed chair.
Kevin Warsh. Okay. And what was inflation yesterday? 3.8%.
Yes.
Headline inflation.
Mm-hmm.
Highest it's been in 3 years.
Yep.
I went back pre-COVID, essentially, that CPI number, which we're going to talk about, is that the good number to use?
Mm-hmm.
I don't think it is, but this is what is coming across the headlines that our retirees are seeing. So let's talk about this number first. 3.8% over the last 12 months. So on average, the theory is that everything is about 4% more than it was a year ago, right?
Mm-hmm.
Pre-COVID, it's now approaching like 29, 30% if you just do the math on it.
Yeah.
So that's a lot, right?
Right.
That's a lot in a relatively short period of time.
Have wages gone up that much?
No.
Exactly, no.
But you brought up this chart, and I thought it was interesting. As usual, Ian's a very technical guy. He knows a lot of stuff. Sometimes you're talking here, and you have to bring it down and dumb it down to my level. So I tried to do that with this chart. But essentially, tell me, what is this saying? We just got a new Fed chairman, and what's going to happen to the stock market?
Yeah, that's definitely one of my weaknesses. I like to just get into the details. So essentially, this is saying every time new Fed chair comes in,
Which just happened, Emma, you said yesterday.
the market tests them.
The market goes down.
Yeah.
Right?
It wants to know how fast they're going to change their mind.
So should we be scared, Emma?
Or not.
Should we be scared that we got Kevin Warsh in and now the market's going to tank?
I mean, I think the thing with this chart is typically Fed chairs are on the board for a very long time. So this literally, I mean, you're looking at Alan Greenspan. I think he's like only the fourth one down, and I think it was in late 70s. So this is a very long time horizon. But even if you look at just the last four, which would be more of a modern era.
Well, you can tell by the names.
Okay, that's a good point.
Eugene.
You're saying in the modern era, this effect hasn't been so bad.
Right. I think like the most, recent one, Jerome Powell, obviously everybody knows. But yeah, Alan Greenspan would probably be the one that I think is the earliest in the modern era, you could say.
Did everyone despise Alan Greenspan?
He had a tough go at it, I think.
Okay. So maybe we should discount this because, as I point out, I just try and make this simple for people. Basically, what this says is that, look, when we get a new Fed chairman, sometime in the first 6 months, the market is going to go down 16%.
Yeah.
Now we're going to start getting phone calls. Will that happen again? I don't know. But it's completely opposite. If you take a look at that previous slide, the experts are saying basically in the next 6 months, stock market's going to go up 4 or 5%.
Mm-hmm.
So
things have been happening faster too, with essentially since 2020. So
Yes.
maybe
Things are not reacting the same.
maybe the little dip from Iran deal is already the test of what's going on that they're going to use as
all right.
the downturn.
So inflation is up. We're going to talk about how much. I'm going to give you some numbers here, okay? 40. Anyone know what the number 40 is? It is the average age of a first-time home buyer, okay?
Mm-hmm.
That's crazy.
33%. Does anyone know what 33% is?
It's 1/3.
Yes, almost. It is the percentage of Americans 18 to 34 that are requiring financial assistance from mom and dad. 8 is the amount of corporate earnings are up compared to the amount of new jobs last year. Corporate earnings were up 8 times more than new jobs created. All right. Here's a good one, 64%. 64% of Gen Z, those are 14 to 29-year-olds. That's you, dude.
I caught it. Barely.
64% of your colleagues cannot live, they say, without a second job. They can't make ends meet without a second job. But this is how lazy you people are. 64% say they can't live without a second job, but only 43% of them have a second job. Okay.
I believe it.
And then last one is, I got a couple more. 45%. Now we're going to 30 to 45-year-olds. Okay. This is the millennials, right? And what did you say you were last?
Zennial.
She's a Zennial. She's trying to be
Yes.
younger. Okay, I love it. But anyway, we're still talking about young people here, and the point of this is the struggle they're having. 45% of millennials are requiring a side hustle gig to get by, okay? And then one more thing, and this goes to what I'm talking about, is this disparity, okay? 49% of total consumer spending, people buying stuff right now, almost half of it is being bought by the top 10% of wage earners, okay? All right. So with that, what is that telling us? What was this? I just told you the stock market's at all-time highs, but yet a 30-year-old can barely buy a house. So what's that telling us?
Clearly prices are higher than what, the government thinks people are paying. Like to have a young person not be able to buy a home until they're 40 years old and potentially have to have 2 or 3 jobs to do so. That's just crazy.
Yeah, and the other thing too, aside from inflation, is the labor market. People that are, like our clients, for example, invested in the market, they're not affected by the labor market. All of these people coming out of college, Gen Z, it's really tough to get a good job, and a lot of the jobs that they studied for in college are no longer, or AI is kind of taking over.
Right. They have to not only be worried about getting a job, but is their job going to be taken over by an AI type of situation versus...
Yeah, and the wealthy and the middle class even is getting more and more separated.
Yeah.
I mean, that last data point you shared.
Wealth gap.
There's a huge
And it just
wealth
keeps getting
gap.
faster and faster and faster.
So I wrote down this morning the things that you could say divide historically America. I wrote down politics. I wrote down race. I wrote down religion. I wrote down age. I wrote down geography. And then money is a big thing, okay? This chart I've been pointing out to anyone who will listen. This is one of the companies we invest in. This is one of my favorite companies, right, Emma?
Yeah.
Emma is in charge of the portfolios at Sear Financial Wealth Advisors, but Dad still gets in the mix here, and I don't have much control over Emma's portfolios anymore, thankfully. Andrea can attest to. But we have a couple, I would call them legacy stocks, and this is one of our legacy stocks.
Yeah.
Operating income. So I'm taking out all the fuddy-duddy, like you see earnings spike because some of these companies have millions and millions of dollars of cash on their balance sheet. Market goes up, their earnings go up, and they didn't do a damn thing, right? This is just operating income. Last 4 years, Google, their earnings have doubled in 4 years. Their payroll has modestly gone up 4%. So what is that telling us? This is just one company. They're all doing the same thing.
Yeah.
I mean, it's clearly bad for the labor market. However, I tend to be the optimist, and so I kind of see this chart. There are some positive things. Clearly, Google is more efficient than it used to be. More efficiency, I mean, any economist, one of the upsides to AI is more efficiency, lower cost for Google, higher demand for things. Google maybe, depending on the product, obviously AI affects differently, but lower cost equal higher demand, and overall some job growth. So I think it's just that the jobs are changing, but in general, I think over the long run there will be some job growth from AI.
Okay. So one more number, 48.2. The University of Michigan Sentiment Survey. This is what Americans fill out and say, I feel great about the future prospects of the economy and my finances. I feel terrible. How do you feel? 48.2, the lowest rating, and I wrote down, in 74 years.
Yeah.
So if you were just looking at that, you would say right now Americans feel the worst that they've felt about their financial economic prospects in 74 years. Is that?
Yet the market hit all-time highs.
Are they pouting? But are they
exactly.
pouting? Because this Ian brought up, trueflation is supposedly a better indicator of real inflation. And what they do is so smart. Our government can't do anything right. They take the inputs to what real inflation is, and they say, what's an average family, what are they actually spending? They're weighting it differently, okay?
Mhm.
They're saying CPI, or inflation, in the last year has not been 3.8%. It's been 1.9%. Are people just pouting, or people are saying, I don't feel good. I don't like what's happening. So I don't know how much of a problem this is. What's your sense?
Well, it definitely, if the trueflation number popped quicker than CPI early on too. So it's definitely a leading indicator. And in my sense is that inflation may look bad on paper, but it's definitely calmed down from what we got the last few years.
Jessica, how are we struggling? I mean, what do you see on the street? You're a man on the street. Is it like on a scale of 1 to 10, what's it like out there? 10 being it's great, 1 being it's awesome. You're our sentiment indicator. Go. Give me a number. 6. All right.
Oh, that's pretty.
See, I'm
pretty
saying
low.
I think it's there.
Well, I think part of, and we talked about this a little bit, the CPI is an annual number, but when you factor in things like 2020, 2022, like all of those years, price levels are high. So although we're kind of back to maybe a more normal number on that trueflation scale, we've still had multiple years of very high inflation where the price levels are so much higher than they were.
Yeah.
So, Andrea, I was thinking about this. I think there is something real going on here. I think that when we talk to our 60-something-year-old retirees, I've been saying on our client messaging, you can do things to help your loved ones. You can help them. Why not think about gifting?
Yeah.
It brings estate planning into things more.
We bring that up a lot with people.
Are they receptive to it?
Yeah, a lot of them like the idea of gifting now and watching them enjoy it when they need it now versus 20 or so years from now when they're no longer here and they don't get to see them use it to either buy a home or a car or whatever it is to help their loved ones now.
I think you can help people. I think you can help your children, your grandkids. I think the winners are the people that can talk to people. I think the winners are the ones who are able to get some help from mom and dad. Maybe it's not bad that Gen Z is getting help from mom and dad. Maybe there should be more of that. There's definitely a separation happening here.
Mm-hmm.
AI is leading the charge. AI is the reason these companies are going up. AI is the reason I hope that the gross domestic product of this country goes from 3% to 6%. That would solve everything.
Yeah.
Okay? And maybe the jobs, because you said maybe we're not going to lose jobs. Maybe what's happening here is the capital investment is booming right now. And maybe we're seeing these companies go up, and maybe the jobs will follow. Because isn't that what the data is saying, that this is going to create more jobs than we're going to lose?
That is what they're saying.
Yeah, it's a different makeup of jobs. There's a lot of jobs that are no longer and a lot of jobs that are created. But ultimately, I think a lot of economists think that positive job growth over the long term is what's going to happen.
Okay. So for our retirees, we should be thinking about estate planning, gifting, children, grandchildren. You know, it's funny. I come from a modest background. I didn't have a trust fund to go to college. I didn't have a 529. I don't think we had 529s. I'm not that.
I don't think so either.
young.
Yeah,
Yeah,
same.
we didn't talk about your gen what?
Let's not talk about that, Ian. I'm not a Zennial either, I don't think. I'm just on the other side of Zennial, right?
Yeah.
Anyway, because at first I always felt like, don't tell me about there's this great divide financially. You know, I didn't have any money. I worked hard, but then you think about it. I was white. I was a male. I am 6'4". I had 2 loving parents that raised me. You know, those 4 things right there, I looked it up, puts me in the top 2% of Americans right there. Forget about money, right? So there is this money thing, I think, and I think it really is a thing. I think it's becoming more and more thing, but it's not just financial. We're acting different. I can't stand the way these kids are acting. What are some of the things that are changing in our culture that we talked about?
We don't talk to other people.
Yeah.
Our
What
generation
is it with
doesn't.
you people not wanting to talk?
Yeah.
We speak 340 words less per day than we did just 15 years ago.
Screens.
Don't text me. Call me and talk to me.
I don't know about you guys, but when's the last time you saw like even a 1 or a 2-year-old? They know how to operate an
Oh,
iPhone.
yeah.
It's
I have
crazy.
I have a niece who
Yep.
cannot even. She's not even close to talking, and she
I-
knows what's going on. She knows the passcode to get in everyone's phone.
Crazy. Like they are swiping already.
Yeah.
Like
Oh,
it's
yeah.
a
I
little
mean,
scary.
it's
Before they can
cool.
talk.
Yes.
It's cool because
It's scary.
you see the brain is such a sponge at that age, but it's also like, wait a minute.
Yeah.
It's not
That's
getting better, is
it-
my point.
Yeah.
no.
Yeah.
No.
And there should be a rule. We should take away Teams, the messaging system that we use. I don't like it.
Efficiency.
You are
Yep.
25 feet away from me. Do not send me a message. Come and talk to me. Look me in the face.
We're embracing efficiency.
Okay, AirPods. I can't stand these. I walked into the elevator the other day. The damn 24-year-old kid's wearing AirPods. I said, I didn't know it. I go, great hair. And he- staring into the elevator door like
I think it's people do it to avoid talking
Yes,
to others.
sure.
You put the headphones in, you have the phone in front of you, and
Unapproachable.
everyone's yes, exactly. You're unapproachable, and they don't have to talk.
well,
to
that's
anybody.
crap. I mean, okay, here's another one. Asking Chat GPT for advice instead of talking to a friend.
Mm-hmm.
That's a real thing,
Yeah.
right? Okay, we just hired a person that works 1,400 miles from the corporate office,
Mm-hmm.
remote working,
Yep.
isolated in a bedroom all day.
Yeah.
That's got to suck,
Yeah.
right? All these things are changing, not just financial, but social changes.
Mm-hmm.
Is this good or bad? And who wins in this race? Like, who wins, you think?
Mm.
I think also our retirees need to help these loved ones talk.
Yeah.
Just
Yeah.
help your
Yeah.
grandson talk.
Exactly.
Take the phone out of his hand. It's not. You should not be proud that your 3-year-old granddaughter can swipe a phone. You should be proud that she knows her ABCs and 1, 2, 3s.
Yeah.
Yeah.
Seriously.
Yeah.
Yeah.
I think the asset owners and investors win most, though, in the long term.
So that's what we're saying. If you own assets like our clients do,
Mm-hmm.
it's great. I mean, the market's been up 19% per year for the last 4 years.
Right. To be a young person trying to buy into this market,
Yeah, that's
though,
what's tough.
is a whole other thing.
You're supposed to buy low and sell high. They're literally buying at
Mm-hmm.
high prices.
Yeah.
But okay, there's some good about society. I don't mean to be the old bald guy, complaining.
Thank
I
God for
am.
the optimists.
Yeah.
But here's what's getting better. Look at this chart right here. This is incredible. Did you guys know this?
Yeah.
What is this, Emma? What
The
does
U.S.
this say?
homicide rate since 1900, we're at a 125-year low homicide rate.
Yeah,
We're
but,
s-
but the negative people say, well, it's because no one's going anywhere. You're sitting in
Yeah,
your house.
That's my point. I mean, but maybe it's a good thing from one perspective. We're so busy being hermit crabs that we don't have time to get out and shoot people anymore. That's really what it is. And so I guess you could say that's good. But this is why they say, here's a number for you, 54%. 54%. All right, now you got to guess. It has to do with, I'm gonna make you guys, I'll give you a hint. It's one of the reasons, indirectly, why we're not shooting people as much anymore. Okay.
Does it have to do with technology?
No. Has to do with consumption. What we
So
intake.
they're not drinking as much?
54%, an 87-year low. 54% of Americans are drinking alcohol right now.
One of the things I think of is I don't carry a lick of cash on me ever. And that's, one less thing for somebody to.
So why
hold
go
you
out
up
with
at
the gun
gunpoint.
to rob somebody if all you're
Yeah.
going to get is like their Bitcoin password or something? It's like there's no cash, right?
Yeah.
Maybe the credit card guys are smart. They were helping us out. We're paying them that 1% every swipe, but they're
Yeah.
making us safe.
Yeah.
Yeah. So, all right. I think that I think it's a real deal. I don't feel good about it. And maybe it's just, I said that a million times. I know that my great-great-grandparents were complaining about how society has changed. I can't see how this is healthy. I can't see how a family of 4 who used to be able to have a good job, a pension, benefits, now mom and dad have to have 2 or 3 side gigs just to make life
Mhm.
doable. I don't
Mhm.
see how that's good.
Right.
And I hate to say it, but I'm concerned about what's going on. And then now you throw in the debt of this country. Is this just, should we get over that? Should I get over this already and just shut up?
Get over the debt? No.
No.
I mean, what's going on, you guys?
Yeah.
All right. So that's what I wanted to talk about today. I think that we should all be thinking about what we can do to help others in our lives. I think we should be thankful. I think we should be not remiss to the fact that this is not going to go for forever. The conference I went to, remember I told you how proud I was of the conference? They said, you should, Dr. Wade Pfau, Chapter 5 of the Retirement Planning Guidebook. He carries it around like a Bible, like Jesus with the Bible. I swear to God. He carried it around. I got a picture of him. He carries his own Bible, and I've called it the Bible. But he says that you should have a stream of guaranteed cash flows. That is what helps retirement best. And that's what we're doing.
Yep.
And people are writing, it's like, you should see the advisors. Hey, Dr. Wade Pfau says you should get some sort of guaranteed annuity to layer it on top of Social Security. And it tremendously helps when the stock market does take a crash. It helps. And you should see advisors like, that's a good idea. I'm like, I want to get up on the stage with Dr. Wade Pfau and say, Wade, I've been doing this for years. You know,
Yep.
it's still, you don't want to get complacent. The market's not going to go on like this forever. But as the guy we talked to yesterday said, Emma, how much longer is it going to go for? Okay, what do you think?
Who knows?
Andrea, how long is it going to go for? It's been 4 years.
I mean, we were saying 3 years ago it wasn't going to continue on, and it's still going. So who knows?
Ian, what do you think? How long is this going to go for?
I don't know. Well, I mean, we got to have some ups and downs throughout it, but I like to be optimistic as well.
I
Yeah.
agree.
I think the leaders are going to lead well in AI
Okay.
and bring back a lot of manufacturing stuff.
Yeah.
The only way we avoid a Great Depression #2 in the next 50 years, the only way it happens, and I'll go down saying this, I've done the work on it. I could be wrong, wouldn't be the first time, but the only way the debt thing works out is by somehow miraculously just supercharging the economy.
Yeah.
And there are people out there that say it's going to happen.
Right.
There are people that say this AI is going to be generationally changing and that GDP will go up to these great numbers. But help the people in your lives. Teach them how to talk.
Yes.
Help them be the who's who and not the have-nots. Don't be an old pessimistic man. Do something positive. This is what's happening in our country. Be thankful that we're asset owners.
Yeah.
Our retirees should be thankful that we're asset owners. Could I have said it any better? I don't think so. No?
Nope. Sounds good to me.
All right, so you want me to end this podcast, don't you? I guarantee you there's still a million people still listening right now. They're so...
Oh, I'm
There are
sure.
a million people.
All right. Emma, have a great day. Andrea, have a great day.
Thanks.
Ian,
You too.
have a great day.
You too.
And we'll see you in the next one. Jessica, since there are still a million people listening,
Yeah.
let's give a hand to Jessica, who's sitting in for Brooke, who had a new baby the other day.
Yes.
Jessica,
Yes.
you did a great job. See you guys on the next one. Take care.
Investment advisory services provided by Seer Financial Inc., SEC registered investment advisor. All content on this podcast is for information purposes only and should not be considered investment, legal, or tax advice. Material presented is believed to be from reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness.